The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for June 21st, 2019. Summer solstice, longest day of the year for North America. First up, Market Watch. Value of debt with negative yields hits $13 trillion. The universe of government bonds with negative yields continues to swell. The total amount of debt with yields below zero touched a record $13 trillion, according to Bloomberg. The ballooning value of sub-zero yield debt reflects how global bond markets continue to attract inflows from jittery investors who see few ports of shelter as a U.S./China trade war threatens to roil international growth. Do you really have to think about this? Do you really want to give your money at time, in other words, a 1 year, 6 month, 2 year, 10 year, 30 year, whatever, and return less? I mean, the whole idea about interest rates, we address this in the Silver Manifesto, is this is what keeps a capitalistic economy going, is the interest rate. It's the price of money and what the value of money is and the future value of money. And in that, you have to account for, these days, inflation and a lot of other factors. So this is very, very concerning that there's that much quote-unquote money out there that's willing to come back with less of it in the future, when in almost all cases there is a subtle to actually rather robust inflation rate, even though the government statistics that are used, or the metrics used to provide the inflation rate, are rather bogus in a lot of cases from the government perspective. Anyway, it's just a sign of the times. Let me move on. This article up from Reuters. Trade tensions kick Asian businesses' confidence to 10-year low. Confidence among Asian companies in the June quarter fell to its lowest since 2008 financial crisis as U.S.-China trade war disrupts global supply chains and shows little sign of easing soon. A Thomson Reuters INSEAD survey found. The Thomson Reuters INSEAD Asian Business Sentiment Index tracking companies' 6 months outlook worsened in the 3 months ending June to 53 versus 63 in the previous 2 quarters. So this trade war is obviously causing more and more concern as it drags on. Well, I move on to energy at this point from oil.com. Global oil market surprisingly oversupplied. Despite OPEC oil production cuts and Venezuela and Iran sanctions, the world seems to be oversupplied with crude oil, the excess amounting to some 90 million barrels above average 2018 levels, according to data. The company said global oil inventories rose as much as 40 million barrels in May alone on the back of weaker demand from refiners and end consumers, as well as steady and strong growth in U.S. light crude production. However, oil prices as late, as I'm doing this on the 21st, as I started at the beginning, let you know the date, because of the tensions in the Middle East, I'd say the China war, trade war, also plays into it somewhat. And then, of course, this thing about the Strait of Hormuz and a drone being shot down by Iran purportedly. So lots going on. Even with an oversupplied oil market, things can change in that arena rather quickly. We're keeping our eye on it, and we'll report accordingly. Bit of an offbeat one, but very, very important to note. It's from the Canary. Title, it's official. Governments and businesses are trashing 100 years of progress. On June 19th, the International Trade Union Confederation released its 2019 Global Rights Index. The report reveals a worrying situation for working people around the world. Launching the 2019 index, the ITUC General Secretary Sharon Burrow was scathing about the current situation. She warned that governments around the world are attempting to silence the age of anger by constraining freedom of speech and assembly. And she highlighted that the number of countries which exclude workers from the right to establish or join a trade union increased from 92 in 2018 to 107 in 2019. She also stressed that the greatest increase took place in Europe, where 50% of the countries now exclude groups of workers from the law, up 20% in 2018. So interesting that the times we living in are more than interesting. A lot going on. This is kind of a subset of the financial stuff I do normally, but a lot happening with freedom of speech. A lot's happening with the big internet players, the Googles and the Twitters, the Facebooks, the YouTubes, etc., really shutting down free speech, which is really abhorrent to a free society. In fact, the first amendment to the Bill of Rights is freedom of speech and the right to assembly. I mean, I can't stress enough how important it is for both sides, or any side, to be able to view or voice their opinion. Whether or not you agree with it's rather immaterial. The most important part is to be able to voice it without restriction, without even having to label it as hate speech or not hate speech. What's hate speech to one person is freedom to another, perhaps. I don't want to go too far down this rabbit trail, but I thought it was interesting. It came up in my financial scan for the week, because this is one of the articles that did come up in the scan that I do each week before I make this weekly wrap-up or weekly perspective. Another article from Reuters: U.S. government should consider halting Facebook cryptocurrency project. Lawmaker: the U.S. government should consider forcing Facebook to freeze work on its new cryptocurrency project, a senior U.S. lawmaker said on Thursday. Representative Maxine Waters, who chairs the House of Representatives Financial Services Committee, said in a CNBC interview that the government needs to study cryptocurrencies and Facebook's initiative, dubbed Libra, further before permitting it to proceed. We should ask them, as we are doing, or force them in any way that we can, to place a moratorium on this new cryptocurrency that they're putting into place, she said, without offering specifics. And from SF Gate, San Francisco Gate, Pompeo warns Iran about trigger for U.S. military action as some in administration question aggressive policy. Secretary of State Mike Pompeo has privately delivered warnings intended for Iranian leaders that any attack by Tehran or its proxies resulting in the death of even one American service member will generate a military counterattack. The potential for a significant military response to even an isolated event has fueled a broader international debate among top Trump officials about whether the administration's policy exceeds President Trump's specific goal of preventing Iran from acquiring nuclear weapons. One such message about retaliation was delivered during a hastily arranged visit to Baghdad by Pompeo in May, after officials detected a spike in intelligence indicating that Iran's militia proxies might resume assaults on U.S. forces operating in proximity to them across Iraq. So there's more news in this, as I mentioned earlier, about this drone situation. Tensions seem to be increasing, not decreasing, not only on this Iranian situation, but also on the trade wars with China. Bond markets are signaling more trouble ahead. Stock market actually is looking okay. And I'm going to move on to gold and close out this week's weekly perspective. This article is from Goldcore, my friend Marco Byrne over in Ireland. Gold surges to all-time record highs of 1,974 ounces in Australian dollars. It might be good to point out, because most of my listenership, readership, viewingship is from North America, primarily the U.S. and Canada, although the Morgan Report is worldwide. It's translated into German, it's translated into Spanish, and it's even translated into Mandarin. Of course, then the main one is English. But the gold market actually has been doing quite well in almost any currency you care to name other than the U.S. dollar. But this week was quite significant for gold, as I have been saying for weeks, and in almost every interview I've given for months, that the 1350 level was, U.S. dollar base, 1350 level, was key. It needed to be taken out. In other words, we need to see gold move through that level and hold above that level. And we used the Morgan rule there, and it held as I'm doing this on Friday. So I really believe that we have now finally made a breakout in gold. Silver has been pulled along with gold, reluctantly, you might say, but it has moved up about $1 over the last month. And gold may even test this level from the top down. In other words, it's been over 1,400 U.S. in the aftermarket or in the Asian markets, and it's Friday and the market hasn't closed as I'm doing this weekly perspective. But the 1350 level U.S. dollar base could be tested in the weeks ahead. Already being up to 1410 really in the aftermarket. I doubt you're going to see it test that low, but it could. Certainly, and if it is, I truly believe it will hold, which means that we are building a new base at a new level, and there will be more interest in gold because higher prices brings more interest into any commodity or any stock. And I do believe that we will see the next level psychologically is 1,400. Really, there's not a lot of resistance to gold up until 1,700 or so. So we might see, as tensions increase, as this oil situation may escalate, and as the Iranian picture becomes perhaps less clear or more aggressive from a war perspective, we could see more fuel to the fire, so to speak, for the safe haven of gold and see the price move up. I really don't like seeing gold move up basis, war or problems with trading partners, etc. But this is the world we're in. It's reality. It's what gold reacts to. I have no control over that. And, of course, it is what it is. Gold is considered to be the ultimate safe haven by very few, but those very few usually have fairly good buying pressure when we have a world as we do right now. I will close it out there with this week's weekly perspective. There are no investment conferences that I'll be attending, as far as I know, for the month of July. So I should be able to make all these from the office here and make sure you get them on time, hopefully to help you get a digest of what I think is the most important news on the financial front for the week in a rather hopefully brief format. Hello, I'm David Morgan, publisher of the Morgan Report, and as some of you may already know, the Morgan Report is about money, metals, and mining. In fact, we cover all resources from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in the Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter: to-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. you'll understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.